Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima, Surabhi, here in the studios. Guys, hi.
Hi.
And Nigel, of course, joining us from the newsroom floor. Nigel, hi, good afternoon. So, we are in recovery mode, I think, very, very clearly. We have been in recovery mode since 12 this afternoon. That was basically when the market hit 17,650, the support we've been talking about since the morning. And then we've not traded below that level since. So we're around 130 odd points, which is a big recovery, a big improvement as compared to the last few hours before that. What is the reason for the recovery? It's what basically took the market lower earlier. It was IT, right? IT is the big pain point, and we'll talk more about this with Rima. But these are just recoveries, intraday recoveries we've seen on IT stocks. You look at Persistent, 6% off the lows, Infosys 5.5%, Emphasis 3.5%, LTI, Mindtree, Tech Mahindra. Many of these stocks are still down sharply on the day, but they are off, in some cases, more than what they're down by on the day so far now. Tech Mahindra, KPIT, HCL and Coforge are some of the other smaller recoveries that we've seen so far. On the Nifty, what this means is, as I said, the low was made at, on your screen, the numbers, the low was made at 17,754. The crucial support is 17,650, which on an intraday basis went. But now, as I said, since 12, we are trading above it. The resistance is the 50% retracement of the entire fall from the all-time high. That stands at 17,857. And I think, as of this morning's open, very surprisingly, the open was around those levels. And then, of course, the first candle itself was a very sharp 100-point downtick. So 17,857 remains the level to be taken out if this market is to go any higher. That's the first resistance in the very, very near term. Rima, hi.
Hi, and if it wasn't for IT, markets perhaps would be trading in the green. Just pull up that contribution plate. The Nifty is down 130 points. Out of that, 115-point loss is an account of Infosys alone, which basically means 85% of the Nifty downside cut today is purely on account of Infosys. If you put in all the other IT names, and you can pretty much explain the entire fall on the benchmark indices. But the rest of the sectors are doing well, particularly banks. So the Nifty Bank is higher by close to about 0.3%. And here again, it's only HDFC which is struggling in trades. So HDFC Bank is down 1.5%. But the rest of the private sector banks, so whether it's an IndusInd Bank or an ICICI Bank, a Kotak Mahindra Bank, they're all holding up in the green. PSU Banking Index, the Nifty PSU Banking Index is up 2.5% with names like State Bank of India. So even in the banking pack, it's only an HDFC Bank which is struggling in trade. The rest of the banks are holding up. Even mid-cap banks like RBL Bank, South Indian Bank, UCO Bank, all of them have very smart gains going for themselves. So banks as a pocket is looking up in trade. And finally, FMCG. The Nifty FMCG index is up nearly 1% with names like Britannia, ITC, HUL batting for the bulls.
Oh, yes, absolutely. Rima, you said it. I think the FMCG big boys are doing a lot of the heavy lifting and the fighting, and banks like SBI, they're also adding to the sentiment. Mid-caps actually are relatively better off. You'd have to say that there's a minor green, at least on the mid-cap index. The breadth of the market is absolutely even, Steven. And for the time being, at least, the market has followed the script. It has tried to be a buy on dip sort of a market, and that buying trend continues. Now, it's still a long way off. We're 130 points away from the green line on the Nifty, so hard to say if this can happen immediately. But overall, globally, sentiment is okay. We've had minor gains in Asia. Chinese markets have done very well. European markets are looking at more incremental gains. The US banking numbers that have come out so far were good, both JP Morgan and Wells, and it's going to be more about Morgan Stanley going forward, Bank of America going forward. So globally, markets are looking quite all right. It's just that our earnings and this big disappointment on IT is something that the market has been trying to digest. Nigel, what would you say? Obviously, it was a pretty hard knock coming back after that 3-day weekend.
Yeah.
But the bulls are trying to do their bit to digest it and move ahead.
Well, even I'm trying to digest that this week is going to be a five-day week. It's going to be a little difficult after
now it's
3
4,
weeks.
Nigel. It's almost one down, just 1 hour left. So let's talk about 4 now.
making it easier, Surabhi. That's good. But the Nifty support zone, 17,500, 17,550. I pointed this out even in the morning that the 50 DMA and the 200 DMA, it's in that vicinity. So that's why that's a crucial support, and we have bounced off those levels. The IT index, now we've seen a fair bit of a correction. Maybe it corrects a couple of percentage points more, but to see it fall, further from here will be interesting. because you want the IT index, given that it has a weightage of high teens on the Nifty, to consolidate around these levels. And just take a look at it. Year to date, or even in the past 1 year, it's underperformed the Nifty. So some part of that bad news could be in the price. Let's see how that plays out. The positive, though, today is let's keep the Nifty at the side. Look at the small cap and the mid cap indices. Both those two indices, they're at the high point of the day as we speak, which is very, very good news. So portfolios will be feeling quite good. Given the Nifty is down more than 100 points still, portfolios will feel good. And take a look at the crisscross lines. At one point of time, you had less than 1,000 stocks that were advancing, but now there's a bit of a fight back out there. And it's almost pretty much even Stevens between the advance as well as the declines. I think briefly we did had more number of stocks advancing than declining as well. So the breadth of the market fairly good. But we have to track the Nifty. So let's focus on a couple of levels then out there. The 17,800 call, well, that's one of the most active in today's trading session. Because that's active, that's telling you at higher levels, you're likely to see some bit of writing. So on the upside, 17,850, that'll become the near-term resistance level. And also the 100 DMA is at around 17,870 odd. And on the downside, 17,550 becomes an important support. So the 300-point range is what we have. Let's see whether or not it's going to break on any which direction. But otherwise, it's been a good trading session for portfolios. Yes, the IT index has, underperformed, but the buy on dips theory is still holding out. Rima.
Well said. Let's take our viewers now. What's lined up in the next 1 hour on Closing Bell? IT stocks under massive pressure after Infosys reported a dismal set of Q4 numbers. What's in store for the sector going ahead? A quick analysis coming your way.
Cummins in focus after Bank of America Securities downgrades the stock to underperform. Key highlights from that report coming up in our special segment, Standout Brokerages.
L&T is under pressure today. What's ailing the stock? Details coming up on the show.
We'll talk more about the market, the setup, the sentiment, earnings season, what cues we're getting in from the West, all that and more with the N. Jaykumar of Prime Securities. So it's a packed next 60 minutes coming up.
Okay, well, that's what's lined up here over the next 60 minutes. How should you